Welcome to The Alternative Investor. Investors witness significant economic disruptions for the hospitality and tourism industry, irrespective of the grim analysis of and predictions for the sector following the COVID-19 outbreak. Unique opportunities are emerging to access quality assets, especially for distressed hotels. I spoke to Marc Wachsberger, who's the MD of the Capital Hotels and Apartments for more. Have a look. Corporate finance whiz turned hotelier Marc Wachsberger spotted a gap for affordable long-term accommodation in the Sandton area. He started up Executive Apartment Hotels, which formed the basis for the now rebranded business, the Capital Hotels and Apartments.
I did 4 years of mergers and acquisitions, and through that we learnt how to model financial opportunities. And really getting to the hotel industry was about renting a residential apartment and subletting it nightly. Renting it monthly, subletting it nightly. There was an arbitrage profit to be made. If we could just hit a 30% occupancy, we would cover the rent, and anything above that is profits. And that's what brought me into the hotel industry.
The group was launched back in 2008, around the time of the global financial crisis, with Hydro Park as the first development. The concept was leasing sectional title apartments, furnishing them, and then subletting them to compete with the hotel sector.
Yeah, so fast forward to today, we're an apartment hotel group of 1,400 rooms, over 10 hotel properties, and the original model of a 3-year lease has served us well, because when the pandemic hit, our ability to firstly adapt as a business to a new environment exists, because we're an owner-operator. By taking a fixed lease and owning our own stock and then subletting it, we care enough to need to and have to adapt to a changing environment. So we went into the quarantine business. We had repatriation flights come and stay with us. We had let out our apartments now as residential, moved into the residential market, so we adapted. But in addition, the 3-year leases, we then did not renew them. So we downsized our inventory, which compared to other hotel groups who always just have that inventory on their books, they weren't able to flex downward when demand lowered.
As a result of the COVID-19 pandemic, investors have witnessed significant economic disruptions for the hospitality and tourism industry. The financial impact on hotel assets has been direct, causing many hotel properties to be restructured or refinanced this year. Meanwhile, an uptick in the sale and acquisition of distressed hotel assets has also occurred.
When times are tough, that's the right time to buy. When times are really distressed, and that's what we're seeing at the moment. But invariably, people don't have money at this time, right? Because they didn't necessarily sell when times were good. They thought it was just going to go and go and go. So I follow Warren Buffett incredibly closely, and that's to be greedy when others are fearful and fearful when others are greedy. Right now, we're seeing people dumping assets. We're seeing such distress. The fear is crazy, and that's the time when we get greedy. But to do that, we had to have sold previously, we had to have taken profits through our good days and utilize that cash to be able to first stabilize our business, which we've done, and then secondly, to now start using that capital and raising an additional capital. And by the way, the ability to raise additional capital is a hugely important factor in tough times. How do we inspire confidence for people to invest with us as well? And really, now's the time to buy. So my advice is, get in now when it's the bottom. Get in when it's the bottom. But don't think that assets should be held forever. Get out when people are getting a little bit frenetic and you start seeing things are a little bit too good to be true. It's also the right time to get out.
Most people say that in a time like this, where there is a little bit of chaos, for lack of a better description, there can be opportunities that pop up everywhere. What kind of opportunities are you seeing right now to access distressed assets, in this particular case, hotels?
It's been since 2011, you had a disarray in the hotel sector in the follow-up and the hang-up of the World Cup. There was really an oversupply. And in the 10 years since, there's been very few hotels been built since then, and you're not finding that there's a huge amount of debt in the market, particularly in the hotel market. But there's debt in all other industries. In the commercial property industry, you've seen huge development and a lot of people getting over leveraged, and even in the residential sector. So the opportunities we're finding now are both in converting distressed commercial assets potentially into hotels, or acquiring distressed hotel assets that over the years over these 10-year period finally have gotten into a distressed position where there is actually an opportunity to buy. And then, true to our model, the opportunity is further to bring in investors to co-invest with us by selling off the apartments one by one and leasing them back into our essentially hotel pool.
Provided hotels are skillfully acquired and actively managed, investments in hotels can generate attractive yields and capital growth. However, Wachsberger employs a rigorous process in order to target the right asset types.
We're big on the what ifs. I call it productive paranoia. So I keep saying, well, what if? What if this isn't the end of COVID? What happens if we get a third wave? What happens if we get another strain and it's another year that we've got to last? So productive paranoia means we'll say, well, we're buying at the bottom, but what if it's not the bottom? What can we do with these hotel rooms that we're buying now that give it a second use to be able to ride out an even tougher time? And that's where we like apartments, because apartments forming part of a hotel means there's the second use. We can put it into the residential market until such time as the hotel market really kicks in, and we can ride. When hotels do well, they do really well. You could imagine when we're running 80% occupancies compared to the current kind of 50% occupancies now, that difference really goes straight to the bottom line. It sends your yields from, call it, the 7% kind of yields, it sends them right up to 16, 17, sometimes 20% yields.
How competitive is the industry that you're in right now?
The world of hotels is incredibly competitive. Right now we're actually in a price war because there's so many rooms and such little demand. So the world of hotels is competitive. But the world of acquiring distressed hotel assets is not highly competitive at the moment. And the reason is that there just is not a lot of capital around. So a lot of people have the same sentiment that I do, that you could buy now at the right time. But how do you raise the money? Where do you even have your own money to invest? There's so few people who follow, this advice that Warren Buffett has originally given us to say, keep your powder dry for the bad times. It's not in our nature to have that. So right now, there's just no buyers in the market. We think we're one of really the only buyers in the market.
Wachsberger is optimistic that the tourism and hotel sectors will recover. The group is planning new hotel developments, including a hotel in Nelspruit in Mpumalanga, set to open later this year. Nastasia Arendse, SABC News, Johannesburg. That's it from me. At 2 o'clock, SABC News will take you live to Parliament, where President Cyril Ramaphosa will reply to the debate on his State of the Nation address. Your weather details are up next, and I'll be back tomorrow with Books on Point.